Here are a few options for your YouTube channel intro, keeping it friendly, engaging, and not over the top, for your EURJPY analysis video. Choose the one that best fits your style. Option 1, direct and enthusiastic. Hey Forex Scope fam! Welcome back to the channel. Today, we're diving deep into the EURJPY pair, bringing you our sharpest 15-minute and 1-minute analysis. If you're looking for potential buy or sell signals and a glimpse into future price movements, you've come to the right place. Make sure you're subscribed so you don't miss out on these insights. Option 2, slightly more casual and benefit-oriented. What's up, traders, and welcome back to Forex Scope. In today's video, we're putting EURJPY under the microscope, examining both the 15-minute and 1-minute charts. We'll be sharing our thoughts on potential trends and those all-important buy or sell opportunities. If you're ready to get a clearer view of where EURJPY might be heading, hit that subscribe button. Option 3, concise and focused. Hello and welcome to Forex Scope. Today's focus is on EURJPY, with a detailed look at the 15-minute and 1-minute timeframes. We're here to provide you with actionable insights, including potential trading signals and an outlook on future price action. Don't forget to subscribe to stay ahead of the market. Option 4, question-based and engaging. Hey everyone, and welcome back to Forex Scope. Are you curious about what's next for EURJPY? Today, we're breaking down this exciting pair on both the 15-minute and 1-minute charts, offering you our analysis and potential trading signals. If you want to refine your trading strategy, make sure you're subscribed to Forex Scope. The resistance zone is identified between 178.64 and 178.733, spanning from the 1500 hours candle on November 11, 2025, to the 1515 candle. This area exhibits strong selling pressure as prices repeatedly failed to break above it. The candles within this range show significant upper wicks, indicating that buyers attempted to push prices higher, but sellers were aggressive and pushed the price back down. The high of 178.733 and the low of 178.608 define the boundaries of this zone. The significant bearish momentum observed as price touches this level suggests it has acted as a strong barrier, causing a reversal or consolidation. The cluster of bearish candles around this price point reinforces its significance as a resistance. This area represents a price level where supply has historically overwhelmed demand, leading to a price decrease. The proximity of these candles and the repeated rejections suggest a well-defined area of supply. The support zone is established between 178.117 and 178.126, observed during the 7 to 7:15 candles on November 11, 2025. This area demonstrates buyers stepping in to absorb selling pressure, preventing further price declines. The candles within this range show considerable lower wicks, signaling that despite price attempts to move lower, buyers quickly emerged, pushing the price back up. The low price of 178.108 and the high price of 178.188 define the extent of this support. The repeated testing of this price level and the subsequent bounces indicate a strong area of demand where buying interest is consistently present, creating a floor for the price. The presence of multiple candles interacting with this price range suggests that it has acted as a significant level of accumulation, where buyers have historically found value and initiated buying activity. This support zone is identified by a series of candlesticks demonstrating a clear price reaction around the 178.564 to 178.633 level. Notably, several candles show a struggle to break decisively below this range, with wicks extending downwards and then prices recovering, indicating buying pressure. Specifically, the period between 176-287-7460, 16 hours and 11 minutes, and 176-287-8300, 16 hours and 25 minutes, showcases price action where the low of 178.522 and the high of 178.562 highlight a zone where the price bounced back multiple times. This suggests that this price level has acted as a floor, preventing further significant downward movement. The presence of at least two significant candlesticks within this zone, one with a closing price of 178.562 at 176-287, 7460 and another with a low of 178.522 at 176-287, 8300, with considerable interaction in between, reinforces its significance as a support area. The area also exhibits some consolidation, where the price briefly moved sideways before attempting to find direction, further validating it as a robust support. The consistent rejection of lower prices implies a strong concentration of buyers at this level. This resistance zone is identified by price action exhibiting a clear ceiling effect between the values of 178.656 and 178.697. Multiple candlesticks show prices reaching this upper boundary and then reversing, indicating strong selling pressure. The period between 176-288-2560, 17 hours and 36 minutes, where the high reached 178.698, and 176-288-2980, 17 hours and 43 minutes, where the high was 178.632, illustrates this resistance effectively. Within this time frame, the price repeatedly failed to sustain levels above 178.697, with several candles showing prominent upper wicks and subsequent declines. This consistent rejection of higher prices signals the presence of significant sellers in this area. The zone encompasses at least two significant price points where the market encountered selling pressure, a high of 178.698 at 176-288-2560 and the low of 178.627 at 176-288-2980, with notable interaction and attempts to break through. The sideways movement and indecision seen within this range, before a clear downturn, also suggest an accumulation of selling interest at these elevated prices, reinforcing its validity as a resistance level. As the EURJPY pair is currently trading around the 178.633 mark, it has recently tested a significant resistance zone between 178.656 and 178.697, as evidenced by the price action between 176-288-2560 and 176-288-2980. This area showed repeated rejections and upper wicks, indicating strong selling pressure. However, the initial upward momentum observed within the latest 1-minute data, pushing towards 178.690, suggests a potential short-term attempt to break through this resistance. This push is further supported by the recent interaction with the Fibonacci retracement levels, where the current price is above the 178.538 level. If the bulls can gather enough strength, we might see a push towards 178.750, potentially challenging the historical highs indicated by the 15-minute resistance at 178.733. The preceding move to 178.590 could represent a minor pullback before further upward continuation. However, the presence of strong resistance and the historical tendency for this pair to consolidate or reverse near these levels means that a failure to break decisively could lead to a sharp decline. A break above 178.750 might open the door for a move towards 178.800, but a failure to do so could see price fall back towards the identified 1-minute support around 178.564, and potentially test lower levels around 178.550, which aligns with earlier price action and the Fibonacci extension. The high tick volume observed during periods of price discovery also hints at potential volatility. The interplay between these levels, the recent price action, and the underlying indicators suggests a market in a critical juncture, with the potential for both sharp upward movements and significant pullbacks. The current bullish lean in the immediate candles is being closely watched against the established resistance.